This is the seasonal stock and ETF report for today, October 7th. Let's go to Trade Seasonal's dashboard. Start with Dow 30. Walmart's back on the top of the list, followed by Microsoft, United Healthcare, J&J. Look at J&J. At sharp ratio of 1.53, there's a drop coming. Can we improve that by bypassing it? Yes, we can. I'm going to change this to 14. There you go. This is a better bet. 1.55. Average profit of 6.4%, and we avoid that drop. So J&J has a higher probability of dropping until the current date, which is October 14. So again, these are all long-term. J&J is the only short-term on the top of the list, mostly because of the vulnerability that's coming in the next week. Yeah, next week there's a chance of markets dropping, possibly sharply. Keurig. Except for Keurig. This is an amazing stock. I was not aware of it until the software. I actually haven't even heard much about it. Paychecks. Broadcom. These are all good, but starting next week is a better bet. However, the best bet is markets turn really bullish. We've covered this before on the 26th. We'll look at it in a little bit right now. Top of the list on S&P is Crown Castle. Crown Castle also has this drop. Well, yes, sharp ratio increases when you move further forward. No, it dropped some, but it's about the same. Keurig is on the top of Russell, and Wilshire Keurig is on the top of that too. This is the time for Keurig. I think I'm going to get in this one. Let's look at the shorts on Wilshire, especially for next week. Rubicon Technologies, look at that drop. This is over 10 years. This is a very sharp drop with high sharp ratio. Could be a really good short-term short play. Everything I have shown so far with October 7th is available to free users. Let's look at ETFs now, and then we're going to look at S&P 500. Consumer staples on the top, followed by semiconductors and technology. Something went wrong. Dividend Appreciation Etf. These are all pretty good long-term longs. There's a short-term preferred Invesco 17 days, average of just 1%. There's a drop right afterwards, so I don't consider this a great opportunity because these things shift. Not a lot, but seasonality shift. So when you go to this exact dates, you could be vulnerable, especially when the average profit is so low. Natural gas. We've talked about this. It's going to peak shortly and then drop even sharper. Look at that. Last 10 years, it's going to start dropping. It's going to peak at mid-October. Okay, let's now look at S&P 500. GSPC. I have discovered this date. Actually, I haven't discovered this date. The software has. Look at that. Can you tell what we're looking at? Well, let me tell you. If you would have bought S&P 500, gone long, October 26th, and you covered it on January 5th, sold it, buy here, sell there. It's a 72 calendar day opportunity. Look at the percent profitable. It's 80%. So you would have made money 80% of the time in the last 90 years. That's actually a really good seasonal trend. But it even gets better. If you click on MFE, you're going to see the highest percentage each of these years achieved. Like, look at this. In 1973, it didn't go up at all. It was just a down. But in these other years, 2007 also, but like this one, market closed 1.49% up, but it went up another 9.43% and then came back down. So, if we put a line through this, which eventually will have this in the software, but right now you have to either imagine it or you have to do it with a drawing software. If you draw that at 2% line, at the 2% line, you're going to have 84% of the 90 years it was profitable. And if you draw the line at 1%, you're going to see that it was profitable 88% of the year in the last 90 years. I'll have this in a blog before this date, so you can actually see the details for it. But this is the magic day that I keep talking about. October 26th, S&P 500 goes bullish. Okay, what happens if we look at Nasdaq? We have only 36 years on Nasdaq. This exact date range is 83% profitable. Average profit was 9.74% over the last 36 years, which is the data that we have. It's a very, very bullish. So between S&P 500 and Nasdaq, this is when you want to go long, as long as things are still stable, because you still have these down years, and down years are something you have to consider as a possibility, but the probability is on your side by quite a bit. That's it for today. Have a good weekend.